Let's do it. I assume you guys can hear me. You could post in the YouTube chat if you can hear me, just so I know, but I'm going to assume that you can. All right, let's do, like I said before, I had a lot going on, and tomorrow is going to be a crazy day in the morning, and then I'll be cool in the afternoon and the evening. We'll be able to do a live stream, an educational topic. Like I said before, for those who just jumped in, I said tomorrow night and tomorrow afternoon I'll be free. Today I was swamped, and tomorrow morning I'm swamped. But when I'm home tomorrow afternoon, I'll definitely do some trading because I'll have the time. And then tomorrow night, I will do a Flux University stream, and I'll talk to you guys tomorrow in the premium chat. You guys can give me your thoughts on what we should talk about. We can pick a topic like Fibonacci or something and focus on that in the live stream as the primary educational topic. But for those Flux University streams, or what I used to do with Vader University streams in the old group, is pick one topic that's the primary. I'll spend like an hour or two going over just that, answering questions, going over examples, some live trades using that particular concept, and then I would take questions. Then somebody would ask about another topic. We'd get into that for a little while. We kind of cover a bunch of stuff, but there's one that would be like the primary where I focus the most of that educational discussion time. So we can do that with anything you guys want, any topic you're particularly interested in, something that you would like to learn more about. Assuming it's something that I'm knowledgeable with, then yeah, we could do that. For now, I just really 10 minutes, 15 minutes, I just wanted to run through the charts with you guys and take a couple questions. So since I haven't really had a chance to chart today, earlier today, like this morning, I was in a short, and then I just sort of got in and out of it a few times. I did really well with... let me go down to like the 15-minute. I had a few of the scalps, but all I did all day were just high-risk scalps. I didn't have any normal trades, all high-risk scalping from the time I woke up until now. We had the initial move. I caught that whole wave in the morning, if you guys caught that. I mean, I was in pretty damn low to the bottom and ran up. That was 5%, so that was a nice initial push. I also did it with ETH Bear. So I made whatever it was, 10 or 12% or something. I think it was only 10%, actually. I think it was up. I think I sold most of it for 9%, and then sold the rest of my position for 2% after it retraced a bit. That was this one, where I got in, like, right at the bottom. Yeah, so it went up 11. I had sold at 9% right at the top, and then it came back down, and I sold for... like 2% before it finished retracing. And then since then, I got into another one here where I had a tiny profit. And then after that, I got in like 2 more times and got stopped out in each of those instances. So since then, I haven't made any other trades either. So now that we have a little bit more data today, I'm just trying to see if we can get more information. It's really been hard to come up with like a strong model for this, just because it's been so inconsistent. Some days the TA works very well. Some days the TA is barely functional. You can't really do much with it. So we'll start with BTC. Take a look at BTC. Man, that hedge was awesome. Do you remember that hedge from, what was it, 2 days ago? It was a really great trade because I got some solid gains out of that drop, and it was a pretty big trade. It was a large hedge. I had a bunch of stuff going on with it. I had like 3 different trades simultaneously. Now this one was from the 7th. This is a second hedge that I did like a day ago. There was another one from a few days prior, but this is the one from a day ago, which didn't do as well. And in this case, you can see we've been to that range ever since. Like, we went all the way down to where my target was on the short, and right back up to the original entry. Never got back above it. So it's a pretty strong resistance there. Now, you could also tell, one of the things I've noticed is as things have become more stable since the big drop and since everything was so erratic, now that we're more stable and consistent, you're seeing the Ichimoku dynamics are really doing their job. I have a lot of confidence in my Ichimoku model now because they've been particularly relevant in the last few days. We've had a lot of instances where it's testing it extraordinarily well. I can get rid of this old trade here. Take a look at this. Look at the 99 EMA. That's a very, very strong resistance, right, guys? How amazing is that? I mean, that's ignoring a couple of the wicks, focusing on the body where most of that trading is happening. And there's 1, 2, 3, 4 hourly wick, hourly candles, completely getting smashed by that resistance, just not being able to close above it. 2 more here and try to make another push. That was a nice bullish move. Total rejection. More total rejections. Like, it's having a really hard time getting through. We poked through a little bit more here where we managed to close above it on this candle. So maybe next time we're able to really push through. So given how strong the 99 has been, and the 55 has also been pretty good. It wasn't good early on, but now it's forming a pretty strong support right there, and it's holding as we speak. That creates an interesting scenario. So one of the things you could do when you have a model like Ichima, you don't necessarily need to have strong supports, horizontal supports, if you're or trend line supports if you're trying to look for like potential formations like pennants and triangles. So one of the things that you can do is, given the fact that the 99 is such a great resistance here, and we have the 55 EMA as a support, even though we don't have a trend line like this main line, which we can zoom out and look at from a 4 hour, even though we don't have a trend line, we can still sort of extrapolate based on what we have. So if the 99 has been this strong of a resistance, if we just extrapolate that, it gives us essentially the same data we would have as if there was actually a trend line that was going like that. You know, like this is a future trend line if it were to keep going this way. It's going to curve up a little bit, actually, just because of how it works. But roughly speaking, that's what we're seeing. So when you have something like that, and you can extrapolate that and extend it and say, all right, well, that's going to be a bit of a trend line going out. And then the support from the 55 EMA, assume that that's going to continue on as a trend line. That sort of gives us an opportunity to apex in a consolidated formation, right? So a consolidation formation is an ascending or descending triangle, a wedge, different formations that include an upper and a lower limit where you have a top side resistance and a bottom support. And those two support and resistances end up generating an apex, which is the final point. And as you approach that apex, you're building up more and more energy, essentially. I like to think of it like you're winding up like a jack-in-the-box, right? And as you're winding it up for longer and longer, you're getting further along in that process towards the apex. And as you approach the apex, you can get really explosive moves. It doesn't always happen like that, but a lot of the time, that's why people get so excited when they see bullish formations like an ascending triangle, or bears get excited if they see a descending triangle. Because once you approach that apex and start moving through that formation, you're building up more and more potential energy, and then that blows towards the end when you reach that apex, right? Sometimes it just keeps going through and leaks through, but more often than not, I mean way more often, like 85-90%. I'd have to look up the numbers, but it's definitely a very, very high percentage of the time you break out with substantial force. So we don't know exactly where it is because we're sort of drawing like an extended. So what I'm saying essentially with this is, you're not really saying that I'm extending this with this exact line and that's my anticipated trend line resistance. What you're saying is, since the EMAs are converging and you have a convergence of them just like this, you're anticipating a big breakout at some point ahead because you know that it's consolidating within a tightening space. So you don't know, you don't have an exact symmetrical triangle that comes to an exact point, but just from looking at this, right, ignoring these lines that I just drew, just from looking at this section here, if that's all I saw was just this one section right here, all I need to see is the price action and the two Ichima dynamics and maybe the cloud as well. So if I can just see the Ichima stuff and the price here, just looking at that, what would pop out in my head is we're going to see a big move relatively soon because we're consolidating within an increasingly smaller space. And as that happens and more of that potential energy builds, we can get a big breakout. So something to consider and just be aware of in the back of your mind. I'm not saying we're going to break up or break down. I'm not going to say it's a guaranteed sure thing, but it's a pretty good probability that we're going to get a pretty big move one way or the other. I wish I could say exactly which way it was going to go. As of right now, I'm starting to lean towards bullish. I've been reluctant to say that we bottomed, but I'm starting to think we actually did hit final bottom. We've decoupled from the stock market. We're not really following the stock market that much anymore. I think initially my theory, at this point, I'm not going to say it was proven right, but I'm definitely getting towards, I'm feeling more and more comfortable saying that and claiming that I was right about that. If you guys don't remember, my theory was that the reason we saw such a correlation between the trading activity in our market and the stock market was because there are a lot of institutional investors now that weren't there 2 years ago in the cryptocurrency market. And as a result, you have those traditional investors, those institutional investors, that are apt to dump at times of international crisis and financial crisis, incoming recession, worldwide events like we're seeing now with this black swan event with the coronavirus. Those people who are normally trading in traditional markets with traditional asset classes have a propensity to dump. That's what they do. They anticipate the market dropping, they dump, and they facilitate that correction by starting it in the first place with their large exits. Those people have migrated into Bitcoin and into cryptocurrencies quite significantly over the last couple of years. And if you ever needed more evidence to see that, this is the evidence. The evidence is that Bitcoin used to be a safe haven asset. I believe it still is. I believe once you eliminate those guys, the guys who are going to dump whenever something like that happens, some big event, those guys are going to dump and it's going to tank the price. But once they're out of the market, I think it's going to resume to what it always was and always will be, which is a safe haven asset. Most of the people who are in crypto look at it that way. The people who have been selling, this is another thing, the people who have been dumping Bitcoin that caused the whole market to crash, those people aren't selling because they don't trust in the future value of Bitcoin. When something is a safe haven asset, it's because you're putting your money into it because when everything else goes down and shit hits the fan, you believe that that particular asset is going to hold its value into the future, so it's safe, it's secure. No matter what, you can be confident that a year, 2 years, 3 years, 5 years, 10 years down the road, you don't have to worry about this thing ceasing to exist or dying and going to zero. So I believe that Bitcoin is still that safe haven asset. And having those other types of investors, these traditional investors that are normally trading in the stock market and forex and equities and securities and commodities, those traditional investors are getting their money out, again, not because they don't believe in the long-term performance of it, because that's what they do. They're going to sell at times like this, take their capital out, so they have that capital available, but they're also doing it because they're trying to avoid a larger dump. And then as things do dump and stabilize, they will, of course, get back in. Bitcoin is going to absolutely explode. The entire crypto market's going to absolutely explode before any of this shit happened with the coronavirus. As most of you guys know, I was talking about a 300 to 750% run this year. I'm definitely closer to the higher end. I think it's going to be upwards of 500 or more now at this point. I'm pretty confident it's going to be up towards that 750 high end. I think it's going to utterly explode from these lower prices, and it's going to run for months like nothing you guys have ever seen. It's going to be incredible. I think we have a huge opportunity here. And you know what? If it doesn't happen and it goes into next year, it doesn't happen until 2021, it's going to happen without a doubt. It's just a function of when. And as of right now, I'm getting more and more confident that my model was right. It is going to happen in 2020. And I think the coronavirus scare and this whole black swan event, market sell-off and dump, actually facilitated that process. It got us down to such a low price that once we do start moving, there are going to be people who want to get back in who sold higher that are still able to get in cheaper. Then there are going to be people who sold higher and are going to FOMO back in because they don't want to miss out. And once that happens, we are going to absolutely explode. It's going to be incredible. It'll really be a sight to see. When that happens, the majors are going to be leading the pack, but a lot of the alts are going to do very well too. The key thing to remember is not all of the alts are. A lot of the alts aren't going to do very well because they're either going to just die off and not be worth anything because they're pointless, or you're going to see capital shift from some of the shit coins into the more prominent altcoins. And there's going to be a lot of money in identifying which are those good projects. And I've done that a lot over the last couple of years. And I have some ideas. We'll talk about that later. Some of them are pretty obvious. XRP is, much as everybody hates XRP, isn't going anywhere. They really do have a foothold. They have the connections. They have all the exchanges eating out of the palm of their hand. They have outside investors that come flocking in. You have people who aren't familiar with crypto who want to buy up XRP because it's, quote, cheap, which we all know is absurd. You could buy $1 in Bitcoin just like you could buy $1 in XRP. But there's a mental factor, something psychological. When they log into Coinbase for the first time and get introduced to cryptocurrencies, they see the option of buying Bitcoin, which is valued at $10,000, versus XRP, which is valued at 25 cents. In their mind, they're like, oh, I'm going to buy the cheap one because if it explodes in the future, I'm going to make more money, when we all know that that's ridiculous, because Bitcoin can go up 150%, just like XRP can go up 150%. But anyway, we're going to have some of the more prominent, well-known large caps that are going to sustain the run along with the majors. There are going to be some altcoins that go to zero probably. I think we've been waiting for 2 years for that. This might be a good time to see that happen. I think as we start moving up, if there are certain coins that don't really perform, once we start the big bull run and some of these coins are like totally blowing up, like I think NEO will do really well, and XRP, like I said, TRX, these more popular ones, and then some of the lesser known alts. WRX is going to be huge because of India. We're going to have huge action out of some of the more recent small caps like HBAR and Cody are going to do well. There are some of these gems that are really going to outperform the rest. Link is obviously going to do exceptionally well. And some of these coins aren't going to do shit. I think, like the ETC, as great as it's been for the last year, I don't think that's a great long-term move. I don't think that's going to really do anything in the long term. I think eventually it's just going to die off. That's the case with a lot of forks or replicated coins, things like that. But we'll go over those later. There's really no rush because that's more of a long-term thing, and we could do some research. I'm going to take some advice from you guys. I'm going to ask you to give me your ideas for long-term stuff. I'm going to work with everybody in the group and kind of put together a list of what you guys suggest may be the best. I'll do some of my own research, and if we work together, hopefully we could put together like a list of some very well-researched ideas where we can come up with, as a team, the best possible longer-term plays. And I can take the 5 or 10 that I have in mind and maybe add on a couple of the ones that you guys may suggest, because you guys do a lot of research too. So that'll be really good to sort of crowdsource our knowledge and crowdsource the research on that. So all that said, that's what I'm thinking is going on with Bitcoin. I think now that we have seen kind of what I've been talking about, it looks like maybe we did bottom out. Maybe that was the final dump and we've sort of gotten those guys out of the market. And now that we no longer have those guys in the market, we're not going to have large institutional players that are dumping. I can't think of any reason why we would move sideways this long, this consistently after the initial dump, given the fact that the stock market has not stopped dumping. So for that reason, at this point, I'm ready to say I'm like 95% sure. I'm getting real, okay, not 95. I'm probably like 75% sure we're done dumping and we've fully bottomed out. So I'm getting back in. I've already been getting back in on like longer term bags. So I've been buying Bitcoin and Ethereum, and I'm going to get some BCH as well. Although BCH is more volatile and does act like an altcoin. Sometimes it acts like one of the majors, and sometimes it acts like an altcoin where it can do 40% in a day or dump 40% in a day. So I'm not going to put as much capital in that up front. I'll kind of wait and see if I can do some swing trades with it along the way. But I will buy some Bitcoin Cash as like just a base to have in my account. But I am loading up on Bitcoin and Ethereum. I may use it to trade, depending on how much I put in and everything. But so far, I've been putting in small chunks of change here and there. I've been buying, a little bit here and there. I'm going to start loading up on much larger positions that are going to be longer term positions that I can always dip into if I really need to. If I have to make a few trades, I can grab some of my BTC, throw it in my trading account if I have to, and then replace it after I'm done with that trading session. But that longer term stuff I keep in cold storage. I'm going to be using a new Trezor, and I'm going to be checking it out, working with messing with all the new features that they have, and trying to use that as a main wallet for the group and everything. They have some HD functionality, which is the tech behind the wallets and how you generate BIP39 addresses. So I'm going to be doing that with the Trezor as well. So I'll probably do like a review on how it works, but I also want to do another giveaway with you guys. So I will be giving away another 2 of them. I'll have to make an announcement when I figure out how to do it, but I'll do another 2 Trezors giveaways for the premium group, and then maybe I'll do another one for the basic group. But anyway, those are going to be in cold storage. That longer term stuff, those long term majors that I'm going to be loading up on and holding, that is going in cold storage primarily. And if the market does drop again, I may sell. So if I accumulate my larger positions, I might leave half of it spread across 4 or 5 different exchange accounts. I don't keep everything on a single 1 or 2 exchanges, because then if you get hacked or the exchange goes down or something, you're SOL. So if you guys remember from our IT and security anti-hacking live stream or voice call that we did with the premium group. We talked about that, about my reasoning and how I separate all my assets across 7 or 8 different exchange accounts. I'm going to do that on another live stream so we can have it recorded, since the last conversation occurred in a voice call and there's no recording of it. The next time we'll do it on a live stream, and that way you guys can refer back to it. But I'll probably leave some portion of my longer term stuff on the exchange so I can sell it if I need to. The only case where I would is if we really started tanking, if we were to drop below the last bottom, right, which was right here at 44.50. If we got down to 44.50, I would be ready to pull the trigger. And then if we start dipping down further than that, I would just dump. I would dump whatever was in my exchange. And then when we get down to the last bottom at 3,800, maybe where those main candles closed at 41.20, once we get down to those next supports, I'd reconsider. Once we got to the initial one, I would, and then the second support, if we start going down to supports, as we go down further, I'd probably consider buying back in, and that would be like, instant free money. With my past strategy, where I use my own personal assets and I short them, I'll sell my Bitcoin if we were to get down and sell my Bitcoin at 44.50, and then I buy my Bitcoin back at $4,000, I made $450 on each Bitcoin. So if I have 10 Bitcoin, I just made $4,500 profit by selling right here and buying back when it got a little bit lower. So just by selling your own assets, you essentially are shorting. It's not technically shorting, but you're executing on the same concepts, the same profit mechanism when you do short sell, when you are margin trading. That profit mechanism of selling higher and buying lower, the only difference is you're not borrowing the coins to sell, you're using your own personal assets, hence the name of the past strategy, PASS, Personal Asset Short Selling Strategy. So that's my overall plan. I'm buying up now. I'm probably going to keep buying if we get any other small dips, but more or less, as long as this trend line holds, I'm going to continue to accumulate. I'm not going to sell unless we were to get down to that last bottom. Then I would probably sell if we go any further. However, I will definitely stop buying and kind of pause things a little bit if we dip down just a little bit more. If we go down to anywhere below 500, I'll be holding, because that's that trend line is going to be key. This trend line is from the first bottom and then the second bottom, so that trend line support is absolutely crucial. If that were to even begin to fail for a second, I wouldn't want to buy into anything. I would 100% expect it to go further at that point, so I'd start getting nervous. I would get prepared, and then if we go down and drop down to that 44.50, then I would be ready to just sell, because I'm already prepared. As soon as we start dipping below this trend line support, I'm getting ready to dump, sell, dump, del. So that's where the trend line comes into play. So that's going to be important. Make sure you make a note of that on your charts. Draw that trend line, and just be prepared. If that trend line starts to fail, we might have to liquidate and get out and buy back in at a lower price. If we don't break that trend line, if we just move up and down, we fluctuate, that's fine, especially on a longer term position. Realistically, if I were to buy in and fill up all my bags, and then we just, tank down to 3,000, and I miss out on an opportunity to sell and my stop loss doesn't get hit, it's really not the end of the world, because that is a long-term position. I know that if I don't touch it for a year, it's going to be worth a hell of a lot more in a year. The only thing is it sucks, because if I did get stopped out, or if I had the opportunity because there was enough time and I was able to sell and liquidate, then I would have an opportunity to buy back cheaper and make money, right? My past strategy again. If I don't have that opportunity to sell because I'm busy and I don't have a stop loss set, obviously I'm going to have a stop loss set, but if I miss out, it's not the end of the world, because that is a long-term bag and I'm prepared to hold it long-term. So in the case of trying to figure out what to do with how much of your assets, if you're going to be holding a long-term position like that, just make sure that if it's a long-term position, it's an amount of money and an amount of capital that you're comfortable tying up for a year. Now, that said, I could always sell it when it's down lower. If it goes down to 3,000, but I'm confident it's going to keep going to 2,500 or to 2,000, I'll just sell it at 3,000. I have no problem. Selling when you're down is completely fine. Anybody who says you don't sell when you're down is an idiot. It makes no sense. If you're down and you think it's going to go down more, then of course you should sell, because you can sell and buy back lower. It makes absolutely no sense to say you don't sell and you don't lose unless you sell. You don't lose unless you sell. I hate that. That has wrecked so many people, and that pisses me off. All right, that's my overall macro view. Let's take a quick look at the current chart and just see if we can identify any patterns. Maybe we can get an idea of what to expect tomorrow, and I'll show you what I'm thinking as an overall count if this ends up being the bottom and that's correct. Let me just take a quick peek and see if you guys drop any important questions in the chat. It's crazy how the past 3 or 4 deeper retrace of stocks with BTC and ETH are holding up pretty well. Yep, like I was just saying, do you think crypto will catch up soon? All right, we already talked about that in detail, obviously. You think BTC is going to correct this week to the low 4,000s? I think that, again, we just covered this, but I still think there's a chance. I'm just getting more confident that we did fully bottom out. I really didn't think so until today. After seeing the market crash today, and again, Bitcoin holding up so well, I'm getting more and more confident. I'm not all the way there. I'm not 100% sure. I'm probably, like I said, 75, maybe more like, maybe 70%. I'm definitely getting more confident. I was probably like 70% sure that we were going to go down more until maybe after we held up here on this last dump and we bounced off of 44.50. Once we bounced there and came back with some pretty solid action there on that buyback, once that happened, I went from being 75% sure we're going to tank to about 50-50. And now, since we've had so much continued success here holding while the stock market's continued to crash, now I'm building up far more confidence that we are going to keep holding and keep moving up from here. But yeah, I'm definitely still considering a 30% or a 40% chance that we do drop lower to the 4,000s, to the 3s, maybe to even the lower 3s. In which case, that's fine. I'll just buy more when we get down there, or I'll sell on the way down. Maybe I'll have a stop loss that'll trip, and then I can buy back in once we get down to that lower price and be making some free money with my past strategy again, right? So anybody else have any questions for now? And then we'll run through the charts, because once we're finished looking at the charts, I'll just probably want to go crash. I'm so tired. I have to take a shower really quick before I go to bed, because I have to get out about early in the morning. And I had a haircut today, so I still haven't showered since my haircut. I got to do that and get all the hair off of me. Yeah, so if anybody has any questions, speak now. You'd rather me have rest, so I'm on my game for trading tomorrow. Well, considering the fact that most of the days when I'm on my game for trading, I probably slept 1, 2, or 3 hours. I don't generally need that much sleep, but I do for tomorrow. I want to get some rest. I have to go meet with a client of mine down on the Cape. They're down on Cape Cod, and for those who don't know, I've mostly retired from my business. I still do work for my clients, but I don't take on any new clients. So I do really high-end residential. I also do commercial. There's a few office buildings that I manage, but I do IT and custom electronic systems, smart homes, Crestron Savant systems. You'll have a touchscreen on the wall that controls the lighting, heating and air conditioning, the music with speakers in every room, full home theater, surround sound, multiple displays throughout the house with a video distribution system, all of which is controlled by an iPad or touchscreen interfaces, voice control, all sorts of things like that. So it's really, really high-end smart homes. And I do everything. I do the home theaters. I design some of the home theater stuff, but I primarily focus on the IT side of the industry. And I generally hire other people to handle the other stuff because I have my own business. So when I'm doing a job, when somebody wants to put in $150,000, $250,000 home theater in their house, I will sub it out and I'll hire one of the other companies to handle putting in the speaker system and everything, and I'll build a network for the backbone for the control system. I'll program and code the control system myself and hire some guys to install some of the equipment. But it's really cool stuff. I'll show you guys some pictures of some of the systems I do. Most of my clients are, CEOs and celebrities, professional athletes, and the pretty much the 0.1%, not the 1%, like the 0.1%. So it's funny. The client I'm going to meet with tomorrow, you guys would probably know who they are. Well, you would definitely know who they are, and she is freaking out about money because the stock market's crashing. So clients never ask me about money, ever. I've virtually never have clients say something to me about how much is this going to cost. They pretty much just, Jesse, do whatever you want to do, whatever you think is best, send me the bill. That's it. A lot of the time they have personal assistants that handle paying all their bills, so I just send them the bill. The client never even sees a bill. They don't even know. So my client that I'm meeting with tomorrow was asking me 20 questions about it. How much is this going to cost? What can we do? Is there something that we can do? Is there a solution we can implement? So that's kind of funny. That's something, well, not funny, but that's something that you'll notice with what's going on right now in the world. You probably might not realize it, but the richest among us are freaking the fuck out. Like, freaking out about money to the point where they're worried about whether or not they should get, a $40,000 projector instead of a $90,000 projector. Well, to you, that might seem silly, but I even had a client, the same client, was already asking me today. I was going to put in a TV in their Boston house. I'm going to the Cape tomorrow, but in the Boston house, they wanted to add a new TV. I was going to be there doing networking work anyway, so I figured I could just hook up the TV myself. I don't need to send another guy to do it. And I was planning on doing that on my own and everything. So she was asking me how much it's going to cost and was worried about the cost of the TV. And I told her that it's a smaller TV. It's only going to be like $600 or $700. And she said, would it be any less if we just got like a smaller one? So we're talking about somebody who has a $250,000 home theater in their home is now worried about the difference between a $700, $600, or $500 TV. This market is scaring the shit out of the 0.1%, is my point. It's insane. The other funny thing is she asked me before I come over to make sure I get, if I can go to the store and get masks and gloves and make sure I wear them in the house and stay 6 feet away from everybody in the house. And I was like, well, first of all, you can't buy masks anywhere because people like you have bought them all up. But I said that I have, some masks that I do when I'm for work, because I used to do a lot of low voltage wiring, so I have some masks crawling around in attics and everything. So I will wear a mask. But they're freaking out. She thinks that, like, her whole family's going to die. Meanwhile, her kids are young. They're all healthy. They're not even that old. Anyway, it's kind of funny. Man, people are really on edge. It's nuts. Everybody's freaking out. And the richest people in the world are worried about a $500 TV right now because the market is just terrifying them. Hopefully, while I'm there, I can convince them to buy Bitcoin. So I got to do that tomorrow. Early in the morning. I gotta leave here at like 6:30, 7 o'clock before the kids even wake up. Holy shit, that's in 6 hours from now. And I still gotta take a shower. Alright, we gotta hurry up. I gotta get to bed. Okay, let me see if anybody has any questions. Take a look at ETH. Tomorrow, if BTC holds extra stock dips even more, it would really be decoupled. Yeah, I'll be even every second that goes by, the BTC and the market holds while stock market tanks. Every second that continues, I get more and more bullish at the prospect of having our final bottom. But yeah, we can actually break out big going up. It's possible. I don't think it's going to happen right away, but it's definitely possible. And if it does happen tomorrow, I'm going to be really happy that I loaded up on Bitcoin tonight and yesterday and the day before, because I've been buying it a lot recently. Okay, let's take a look at Ethereum then. That's what everybody's asking about. Let me just quickly check and make sure that nobody else had any questions in the other chats. And make sure when we have slow days like this, we're just moving sideways. I don't really see any good trades that are low enough risk. They're all kind of just way too high risk. And I say, hey guys, it's really risky trading right now. You're better off staying out of the market. If you're just sitting on your ass and you're bored, number one, don't jump into trades because you're bored. That's something that a lot of people do. They're bored, they have nothing going on, so they just hop into trades and they end up losing money because we happen to be in a very risky market right now. Second thing is when you're bored and you don't have anything going on, you won't keep buying trades like that if you keep yourself busy, and the best way to stay busy would be to focus on educational content. If you can spend your time working on the Flux University stuff, focusing entirely on the educational content in the group, instead of sitting around, diddling yourself and getting into trades that are way too high risk that you shouldn't be getting into, get into Flux University. I know the basic members who are here right now don't have access to that content. You guys, the best option for you would be to stop being cheap bastards and pay up and support me. But assuming that you're not in a position to do so, then even though you don't have access to Flux University, you can still get into some of the free stuff that I have. I put a bunch of stuff in the basic group. I've set some links up in there that direct you guys to other to some free online resources for educational stuff. I think I dropped a link to Crypto Cred. He has a lot of educational videos that are really, really helpful, especially for newer traders. So look at that stuff. Check out some of that free content and see if you can start learning some of this stuff, because the more you can learn and the more you can build up your skill set, the much more successful you will be when you get to the point where you're trading like I am, and you're dealing with much larger sums. You're dealing with different trading styles, whether it's high intensity, low intensity, short-term, long-term, scalping, flash trading, swing trading, day trading. No matter what it is, you can kind of do everything and be a jack of all trades as you build up that skill set. So the sooner you can start, the more you can start expanding your skills and developing your risk management capabilities, the much better you're going to be. Once you get to those higher levels, you're going to have all the tools you need to really execute and take advantage of that. So, but yeah, if you join Flux Premium, you'll get Flux University, live streams like this, phone calls with me. We can work on stuff. I love teaching this stuff. I'm so dedicated to it. I'm obsessed with sharing this stuff with you guys. So if you're considering joining the premium group, education is the key. That's the main reason why people join and why they stay. So when the market's shitty like this, upgrade and focus entirely on education for a day or two, because you have an opportunity when there's a lull in the market. And the best thing you could do is to brush up on certain skills. So say we break out tomorrow and you spent 4 hours today working on Fibonacci extensions. So tomorrow, once we break out, you notice that one of the coins that's breaking out on Matic is aiming at a 1618 fib extension. So you ID that fib extension, you enter into a trade and set a target up at that 1618 extension and walk away with a 22% profit because you spent a couple hours the day before learning about that one particular concept. If you spend your time learning, you can immediately translate into a return. You can spend 4 hours or 2 hours today learning about one particular topic, and that one topic can make you $1,000 tomorrow. So that's why it's so important that you learn this stuff and really work on building your repertoire. So anyway, let's get to the charts, like I said. The ETH resistance trend line. Yeah, I'm going to take a look at Ethereum now. Oh, there's only 17 people in the stream now. There were like 22 before, even more. Where'd everybody go? All right, so looking at Ethereum, macro. Well, let me go back to Bitcoin really quick. So I was looking at this before, and I'm thinking I wanted to just quickly mention that so overall, if we ended up completing the bottom here, what would that mean, right? That would mean our initial move would be wave 1, and then we had wave 2, right? So if that's our 1-2, I was going to say this wick here versus that pump, this is kind of a hard structure to really use. It's hard to justify it because it's so coming off of a dump like that and then an immediate rebound like that bounce. It's really difficult to justify using that as a valid move because there's so much craziness happening when stuff like that happens. You're not going to be following a particular model all that well. So I don't really trust this to come up with a fresh count off of here. Like, I wouldn't say that I would trust this to follow the normal rules where they have wave 1, and then wave 2, and then wave 3 is a 1-6-1-8 extension of wave 1, and then wave 4 retraces to the 7-8-6 from the 1 to 3 move. I wouldn't try to follow along with certain rules like that are supposed to retrace to certain levels or extend to certain levels. But as like a rough count, I would still expect an overall 5-wave structure. So even though this isn't a very clean structure, the way it kind of worked out with this initial wick up, and then we got this pump here that was sort of an erratic pump and then dump right back down based on the news. By the way, I called that pump perfectly. Anyway, this would be a wave 1, wave 2. So this is wave 3, right? So like I said, I wouldn't consider this to be a particularly valid count where the rules would fit perfectly. I wouldn't expect this to really kind of check all the boxes when I expect where would a certain wave go and by how much. But as a rough rule of thumb, just to get like a general idea, I'm still going to do it just to take a look at. I'm curious. I want to see if it does have any potential targets that would make sense. So roughly speaking, if this was a 1, 2, 3, then wave 3 would be about a 1-6-1-8 extension of wave 1. Most likely, it can be something else, but that would be the most probable target. So what I want to do is I'm going to check and see if that 1-6-1-8 extension right here is actually a good resistance. So if we got into a huge breakout here and that wave 3 target really was the 1-6-1-8, it's actually not bad. 80-20 is a perfect resistance. Check this out. Not only is 8,000 a really good resistance because it's a main even number, but right here we got some really strong resistance right there, as a matter of fact. Look at this. That's the 1-6-1-8, that line right there. So if I drop this resistance right there, take a look, man. That's actually pretty on point. Major resistance got rejected. Major resistance, several coins in a row, right? Or coins, several candles in a row got rejected. A lot of resistance here. It never got quite up, but it got rejected a little bit further south. Poked through for a minute here before coming back down. And again, over here, it was pretty strong support. Let's run back and see if we go back in time, if we can find a point where that was also a relevant support. So this would be our most recent dump. So we got right here, looks like some strong, I'm looking at the daily. This is probably going to work really well, actually. Let me see. So the yellow line, right? That's the 1-6-1-8. I'm looking back to see if that's a strong support resistance. To see if that's guys, come on, this is pretty kick-ass. I love when I randomly do this especially in educational streams. This is always incredible. I will randomly pick a random chart, a random concept, like, hey, I'm going to show you Fibonacci, I'm going to show you support and resistance. One of the main lessons I teach with support and resistance is you just open up a chart and you move your mouse around and you look at the line going across, those crosshairs. When you see an area like right here, I just got to this area. If you look at the horizontal line where the dotted line is, right on the right side of the chart, right here where I'm moving my mouse, so that dotted line, I just sort of moved my mouse around and noticed when I had the mouse right here, it was a perfect strong resistance that rejected these candles over here. And then if you follow that line across, it was a really strong support off of that wick right here. So just that stood out to me. And then if you follow it across, you can see it's pretty close here to support and resistance. And I bet if I go further over, it's going to be similarly as important. Let me see. It's what price? 84.60. 84.60. Again, look, that's 84.60 is right there. Major support. So just from randomly moving your mouse around, you'll notice and identify these really important support and resistance levels. And support and resistance are the most important thing on any chart ever. Like, by far. That's the most important concept you guys need to master. Not even a question. So, what I just noticed was, I was showing you guys about how I randomly selected, well, it wasn't random because I did the 1618 extension, and I said, all right, well, hypothetically, if this wave 3 hits the 1618 extension, would that be a good point to stop where it's going to get hard resistance? So sure enough, it looked pretty relevant here. That was a pretty decent support and resistance, right? So then I just drew it and zoomed out further, and man, look at that. That is perfect. Major support right here. Like, perfect. All these candles getting held up by that one level. So this is definitely a viable support and resistance. And then obviously it was getting broken before that. But the fact is, the last 3 sections, back from where we are, where this was relevant, so it was here, over here, and then the first time after we go back, again right here, it was very valid as a support. So that leads me to believe that that is going to come into play later. I think that's going to be a valid SR later on. You can see there was a lot of action, a lot of support right there. So over here was getting broken a lot, but again, this was a really strong resistance on that big wick. Strong resistance on this big wick here. Let's go back even further, one more section, and see if we can see the next time prior to here that it came into. Look at that, guys. How sick is that? Again, this was just like a random line on a random chart. I didn't plan this ahead of time, and it ended up being like a perfect example. So if you just did this on your own and you were looking around on the chart, nothing I just did is a crazy advanced topic, right? Anybody can do that. Any of you guys can look at a chart and say, let's see what the 1618, all you need to know is that a wave 3 is usually a 1618 extension of wave 1. So you use Fibonacci extension and you find where the 1618 is. Then you drop a support right there, and you can say, all right, well, let me take a look at the hourly and the 4-hour charts. I'm going to go back in time and see if this particular line has been a relevant support and resistance in the past. That's all it took. And just from doing that, I was able to identify some really crucial supports here. This was a major support at this point because it had a huge dump coming down, and it finally stopped. Looks like 3 candles on the hourly in a row. It got supported by that exact level, like exact. Almost to the dollar. It actually was 8,003. If you look at the low up here, that candle was 8,003, and my line is at 8,002.42 cents. So that was literally 58 cents off. Again, if I go back even further, strong resistance, strong support, resistance, resistance. So going back, this 80 and change, this 8,000 level, roughly 8,000 level, is a really, really important support and resistance. So you guys should definitely put it on your chart. I'm gonna have. I already started adding stuff to it, but I have a channel in the group that's called Support and Resistance in the premium group where I constantly dump charts into it. I'm going to be putting a whole bunch. I'm going to be going through my whole list on my watch list and putting all the support and resistance on every chart, and I'm going to dump it in there. So if you guys are ever doing TA or trying to get an idea of what's happening with a chart, you can look at that support and resistance chart. And once you have the SRs, once you have those supports, you have most of what you need to figure this stuff out. Man, that was, look at this, major support and resistance on that line too. So that'll be a really helpful asset to have moving forward. So my macro view, we went over more short term from a TA perspective. If that, see, people left the fucking group again, the stream again. Is this a bad live? Am I doing a bad job? Why does everybody keep leaving? Maybe they just wanted me to go over charts and show them trades or something, and they're not interested in learning, and they're not interested in figuring out how to be successful doing this on their own. That sucks. I'm going to yell at everybody in the group and ask why they ditched me. So we have this potential scenario where if, again, I'm not sold on this, but if this was the bottom, that would mean we're in a wave 3 where we could potentially, before we get to that main resistance, and there's also really strong resistance at 76.95. So this whole region is going to be a major, major resistance zone from the high 7,000s to the low 8,000s. If this were to hold like that, we're looking at a potential 50% run up to finish out that wave 3. So there's a lot of potential here if that's the case. So it's not unreasonable to get into a long-term hold here, which is what I did. I'm probably going to set a stop loss down to below, right below that last bottom, which is, it's 20% down. I don't expect this to hit. So the reason why I'm setting a stop loss, I'm going to be, if I were to buy right here, for instance, and set my stop loss down here below that last bottom, that would be about an 18, 17% stop loss from where the current price is. Now, I would never use that like day trading or anything, but the reason it actually does make sense here is because I'm not going to have that stop loss trigger unless it's a huge dump. So if the price were to completely crash down to 3,500 in 5 minutes, I want it to stop me out for a 20% loss because I don't want to take a 50% loss, right? That makes sense. Everybody, I'm sure, would agree. So if we were to tank wicked hard, I'll take a stop and lose 17 or 18% because we're going to be going much further than that. If we fail to hold at that last bottom, we're tanking down into the threes, no question. So that's why I'm going to be setting a stop loss down for such a big drop. But I'm going to have alerts the whole way every time we go down. If we break south of this trend line, I'll get an alert. So if I were to look at this more short term, if that's that wave 1 and now we're in wave 3, we want to get a subwave count, it would be a lot of, it's not easy because we're not that far into it, but it would be kind of shorter term, be 1, 2, 3, yeah, it'd be something like that. Actually, it probably wouldn't work like that. I bet this would be... yeah, it could work something like that. We could have a short wave 1, minor correction, nothing too bad. So we could actually get like a subwave, wave 3 right here. We might get our subwave 3 right here. Let me move that wave 3 further over because that's definitely going to be much further over. So we could be looking at something roughly like that. This isn't precise, just a very, very rough idea of sort of how it would look. I'm not saying this is what's going to happen. It's just roughly how it would look. So we're in a position now where we have a subwave of a subwave, and then this wave 3 that we're currently in, if we were looking at that subwave 3, would also have another sub count, right? So in this case, we would have 1, 2, 3, 4, 5. I'm not going to draw it out. Just needless to say, we're very early on here, and this is where my other stuff would come into play. So looking at the Ichimoku dynamics, we have the 55 and 99 EMA that are extremely pertinent at this point. The 222 is all the way up top, so that's not really relevant for quite a while. But the 55 and the 99 are right in the thick of it right now. It's absolutely crucial. We also have the top of the cloud here providing really strong support. Just to show you guys, we had major rejections here from the bottom of the cloud. Same thing over here. So the cloud is working extremely well. Over at this point, if you guys remember, I called a short as we were coming up against the cloud. And I said we're going to follow that cloud down and tank. And sure enough, we tanked really hard because of that Ichimoku dynamic support. At this cloud, we had like a wall. I said the same thing over here. We're going to tank. So I shorted and I made money on this drop. Now, in this particular case, I thought we were going to drop all the way down because of this cloud was like a wall. We ended up breaking into the cloud. So once we broke into the cloud, you can go back and look at all my posts, but what I was saying was now that we're in the cloud, we're either going to break all the way across to the top of the cloud or we're going to get held up because of the Ichimoku dynamics with the 99 EMA. If we can't break that 99 EMA, we're just going to keep moving sideways. We're not going to be able to break up to get to the top of the cloud. So in this instance, we got sucked into the cloud. The 99 EMA rejected us. We came back down. And again, really strong support from the bottom of the cloud. So all the Ichimoku dynamics are doing their job. Then we got out, came back down, tested the bottom of the cloud. Went back up, came back down. Now we're testing the bottom of the cloud with the 55 EMA. This is a great position to be in because it's a really low risk entry. I'm actually going to be getting in bigger than I was planning originally because this is actually a great short-term trade too. So in this case, we're sitting right on top of the 55 EMA that has been holding really well. We have the 99 EMA above us as resistance, but we have the top of the cloud right here that's also been providing good support, right? The top of the cloud and the bottom have been really crucial for support and resistance. Now, the way the cloud is coming together here, this is all the crazy dump action catching up with us, so I don't expect it to be particularly relevant. I don't know if it's going to hold that well as a modeling tool, but I'm going to utilize it in this particular instance because I don't have anything else. in that area, but it's also given me some confluence. We also have the 55 EMA, so when you have two indicators that are in agreement on the exact same thing, that's confluence. So right now I have confluence with these two indicators telling me that we're going to hold roughly right here because we have a lot of support. Then 55 EMA on the top of the cloud. So by entering right here, my stop loss can go only 1.4% below my entry. It's a pretty low risk trade. I'm only risking 1.4%, but it ends up being a little bit more risky because I'm going to be putting in $120,000 into Bitcoin right now. So that makes it a little risky because in that case, I'm going to be losing $2,000 if I lose 1.4%. If I can reduce that risk and maybe risk like 1% even, that would be nice. What I'll probably do is start off risking 1.4%. And then if we do bounce up from here and go up like 1 or 2%, I could tighten it up and set my stop loss right below the top of the cloud. So I'm only risking 1%. That'll be much more palatable. Yeah, so I'm getting in here. So this is short term. We had to move up and then a little tiny correction. So a little wave 1, 2. Now we're in a little subwave of a subwave of a subwave with wave 3. So yeah, we could definitely break out here. We could also come down further and test the bottom of the cloud, which is why I have my stop loss below, just so there's enough space. So if we do dip, the bottom of the cloud will protect me. Theoretically, we could move sideways and then dip down to the top of the cloud right here. And that would stop me out because my stop loss would be a little bit higher. I just don't think that's going to happen. I think if we're going to bounce, it's going to be sooner, especially since the stochastic is getting pretty close to oversold on the hourly. If we take a look at the 4 hour, see how it looks. So on the 4 hour, it looks like we're pretty close to correcting. That makes me a little bit concerned, as a matter of fact, but not enough to not get into the trade. Because what we've seen lately, especially with all this big dumping, is the oscillators are kind of out of whack. Just from seeing bullish divergence, that's not particularly bullish right now because the oscillators were so disrupted by the rapid dumping and the crazy selling in action that we saw that it's going to take another few days, maybe another week or two before all the oscillators, the stochastic models and RSI are really going to feel like they're back to normal 100%. They're helpful now. You can see the stochastic reversal still times really well. This bounce happened at the bottom. This bounce over here happened at the bottom of a local bounce. This correction here started pretty close to the top there. So it still fits. It's just not as clean and not as perfect as it was from 3 weeks ago, right? Where every single trade we got into was perfect using the Stoke model. Now it's hit or miss. You have to make sure you're paying attention to other stuff like the Ichima model and you're looking for other horizontal support and resistance. So you make sure you're getting into a properly timed trade. So I'm not too worried. We could easily push up higher here on the 4 hour, but we're starting to cross over now. If we get an immediate push up, then it's not an issue. Then we can keep going up for another full hourly cycle. So a full cycle on the Stoke would be from bottom to top, back to bottom again, that full cycle of the wave. We can get another one of those before the 4 hour even has to correct. I'm not going to explain that in more detail. I'm just going to leave it at that. But point is, I'm comfortable getting into this trade now. Even though the 4 hour stochastic is on the high side, it doesn't prohibit me from getting into the trade. It's still completely acceptable and within my risk tolerance. Let me multitask here. No, what the so annoying. You know what, I'm going to get in my Bitcoin, set a couple quick Bitcoin buys. I wonder if it's worth getting into the leverage trades. I don't think so. These are kind of risky, especially if I'm day trading it and I can watch it live. I'm fine with it. But if I can't watch it live, it makes me kind of nervous because these things, I have heard a lot of horror stories about people getting screwed over because of the way they calculate the values and everything. Theoretically, it could be a good play since I expect a short-term bounce. I'm putting a lot of money into Bitcoin, and I'm probably going to do Ethereum too. But this would be like a small thing. I would put like a couple grand or something into Bull, and that would be just a way to make extra money since I'm pretty confident that it's going to bounce. Look at that. That was my bear where I got stopped out on that wick. And I said as soon as it stopped me out, I was like, great, now it's going to go back up. And sure enough, from the bottom, it stopped me out about, what, 27? Came back up 8%, but I didn't have a lot of money in it. It's not a big deal. I'm fine with it. I'm not going to complain. Let me see. Yeah, let me just set a couple orders really quick, and then we'll go into the rest of these things. Well, it's going up a little bit. I'm gonna have to pay a little bit more because I can't stay up all night trying to get a surgically timed entry. Whatever. All right, I think I'm good. All right. I got a little bit of I put a little bit, just a chunk of change into the bull pair token, since I think Bitcoin's gonna bounce, get above the cloud here, get back above the 55 EMA. I'm not necessarily expecting some huge breakout or anything, but I think we'll get a little bounce here. So let's do that. And keep an eye on those. Oh, I'm actually already up a little bit because I got in a little before that. I'm not worried about the target for this, but just a rough idea would be about 5,800. If we got a nice break for up to 10%, could get up to like 5,800. So that's more or less my trade on Bitcoin. Some variations here and there, but so really quick, take a look at Ethereum. I'm seriously butthurt that people are leaving the live stream, man. That sucks. I really thought this was a good educational stream. We went over some good stuff. That bums me out. Fuck, dude. Sorry, hold on a sec. All right. So really quick, Ethereum, similar to BTC, same configuration, longer term. We got the big run up, came back down. We're looking at a larger wave 3 with a shorter term, minor wave 3, right? So short term, we have that bounce, came back for a correction. We're going to push up here, same thing. So wave 3. So in theory, that's a valid count. That would work. So you'd be able to say this is 1, 2, call it whatever, 3, 4, 5. You can say that that's a valid impulse wave as long as we don't retrace below the start of wave 1, or the start of wave 2 rather. So as long as this count's valid, that works fine. That would be like an ABC. It's a perfect ABC as a matter of fact. So we have that ABC. From the bottom of the third wave, we're just starting it now. So in theory, we have like we have a wave 2 correction. We could come back down a little bit further to like 112 or so. It's hard to say. I'm not seeing enough here in the way of like support and resistance to really identify it, but we do have the ascending triangle. So let me actually highlight that for you guys. It's not technically an ascending triangle yet. Well, it kind of is. So it's really high angular. Let me show you. Damn it. Let's do green. Or green. So the topside resistance, right? This major resistance here certainly works at 119.70. That's totally viable. So this is a main support and resistance. Actually, right here, if you take a look, it's more like right there. It goes up slightly higher, where all of these are getting bounced. That's a major support there. So it's slightly a little bit of a range. It goes from there down. It's only the difference of like $1 though. So just for illustrative purposes, I'm going to do it this way. This is a major resistance with all the wicks that are getting pushed off. So now that we have a nice trend line support here, it's not that consistent because there are some variations in how it came together. In reality, it was good until about right here, and then it failed, and we actually broke south of it. But if I redrew it, since we're sitting right on another support right there, it's theoretically possible we could bounce up from here, maybe another candle or two. Once we do bounce up, though, we do need to break through that resistance. If we fail again to break through that resistance, I don't know how it's going to work. So right now, we're sitting on support at 116 and change. If we get up from here, then we're going to have some support from the cloud. But if you look at how Ethereum has played out, we haven't had as much cloud-based support. This is, again, a result of the big dumping and how it threw the price action so out of whack. But we have a reset on the oscillators. The Stoke is coming back down. It's pretty damn close to resetting on the 1 hour. The 4 hour is going to be high, just like Bitcoin. So that one also looks like it has to correct. But in the short term, we should be able to get a nice bounce. Just so everybody knows, I'm still considering any trade that I do right now is still high risk. I will have low risk trade ideas once that 4 hour stochastic is down low. Once that comes back down and it's below, say, 30, then a lot of the trades I get into will be low or medium low risk. And I always tell you guys, hey, this is high risk, this is low risk. If you see that comes together with the stochastic coming back down to reset, then yeah, then we're definitely in a position with some low risk opportunities. But I already actually was thinking about doing a trade on here before, but the Stoke was still pretty high. I'm not going to enter. I only entered Bitcoin so far. I'm not going to do an Ethereum entry. Now, realistically, if Bitcoin breaks up, Ethereum will too. But there has been a little bit of unusual activity. Normally, Ethereum is going to outperform Bitcoin either direction. It'll go up more than Bitcoin does, go down more than Bitcoin does. That hasn't been the case the last day or two. At times it is, but more or less it's hit or miss. I don't really want to do anything with Ethereum, but Ethereum is going to follow the same path as BTC as it has been. We're definitely in this larger impulse wave. So at this point, from a purely TA perspective, we definitely have everything we need to continue a pretty big run up on everything, including BTC getting back well into the 6,000s. So I think Vamp actually had a setup. His target on the way up, if we did get the bounce, is like 6,500. So if we do get that push up, we can very well hit his target. And longer term stuff, higher time frames, he's a master. He comes up with the most incredible longer term calls. So I wouldn't be surprised if it hit pretty much exactly what he was targeting. I just don't know if, it's not going to break out now when the stochastic's that high on the 4 hour. I mean, it could. I just think it's pretty unlikely. Most likely it has to reset, get to that nice low risk configuration. Then we'll have a chance to push up. This is definitely not low risk. The only reason why I made this trade, Ethereum's not ready, but Bitcoin is, because Bitcoin has confluence with the 55 EMA and the top of the cloud. We have two of those. Each of my dynamic supports really close together. Let's really quickly take a look at the alts, and then I got to bounce. So one of the key things to look at with the alts, you want to be able to see whether or not these are looking similar to or divergent from how Bitcoin is. So if these also have a 4 hour stoke that's maxed out, it's unlikely they're going to do well if Bitcoin does indeed correct. Now, in this case, with CHZ, we're definitely in a position where we could move from here. Let me just look at a few really quick. So Cody's getting high with the oscillator. Link is pretty high. One of the things I'll look for when I'm trying to find alts that may be ready to make a move is when everything else is super high and overbought on the stochastic, I'll look for a couple things that are really low. And those are the ones that may actually pump when Bitcoin does dump. So if the whole market is correcting and everything's going down and you see 3 or 4 coins that are going up and nice solid greens, those are usually the ones that actually had a bullish oscillator configuration before everything else started correcting. So I'm just trying to get an idea if any of these might have some upward momentum we can latch onto. WRX is definitely a viable candidate. That might have some nice momentum we can grab a hold of. Theta won't work. That's definitely overextended already. So, Algo is also too high, but man, I knew these things were going to move. Unfortunately, I just didn't get in at the right time. TC is definitely going to be correcting too. Yeah, the best bet, WRX might be the best alt play we have here. It's still going to be high risk, but Cody and WRX both have potential. I want to look at the lower time frames now. Yeah, I'm not seeing much that look like they have enough momentum that we can actually use. Everything seems to be relatively close to reversing, especially one. All right. XTZ, BTC pairing is actually not bad. So let's take a look at WRX. And Cody. Oh, that was Cody BTC. How does Cody USDT look? Yeah, definitely not as good. Let me see. It's actually not that far off, to be honest. So looking at the hourly here, we got WRX. What do we have for supports? That's kind of tough. Cody looks a little bit better because it has a really solid trend line support. Let's see if that would be usable. It's held so far. That might not be a bad support to try to play. So this is a really good example where just looking at it and just kind of seeing with my eyes, it just sort of fills it in. Again, this is something that comes with time, and you guys will be able to do this eventually. But just looking at this, I sort of saw the uptrend, right? And that's why I drew the line. But I also saw that the 55 EMA was coming through sideways right here. And other than a few wicks, it was holding pretty steady. So I was able to identify a bit of ascending triangle action, right? We got 3 points of contact, got a strong trend line support with also 3 points of contact. This is a valid ascending triangle. It's coming up into a bearish cloud, but we get the bottom of the cloud for resistance. If we can get above the 55 EMA, then we're wide open to the 99 EMA. Like, this cloud isn't going to hold us. It's a tiny cloud. There's not a lot of resistance there. It was pretty strong, the bottom of that cloud before, but I think if we can push through, there's an easy case to be made that we could push straight through and test that 99 EMA for at the top of the cloud. It would actually come together right around there, so we would get confluence, top of the cloud plus the 99. But if we can get a push up from here, that would be the main resistance right there. We could potentially see an 8% move up first, though. Let's see. I'm going to place some orders. Actually, I'm going to get Cody. Again, I'm still saying it's high risk, but this is the only alt. I just looked at about, I think, maybe 18 or 20 coins, kind of scoping through my watch list, and the only two were WRX and Cody that even looked like there were any potential trade going on there. The reason why I'm going to make the move here on Cody, because we have a nice 8% target that's pretty easy to achieve if we can just get above the 99 EMA and the top of that, or the 55 and the top resistance here, that resistance that's forming the top of this triangle. The fact that we have a bullish formation with the ascending triangle, and the fact that we're sitting right on that trend line support means I can place my stop loss only less than 2% below my entry. Let me place my orders really quick, actually. Just get my order in, and then I'll finish explaining my plan. All right, I'm good. That should be all set. All right, I'm good. Hoping we come back down to 1200, just a little bit further down. 1207, I think it was, right? 1208. Yeah, 1207 and 1208. I have a few different orders going. I just bought some already, though, so if it pushes up from here, I'm already going to make some money. So, yeah, we got the first target, the top right here, that resistance. Got to break through that, and if we break through that, along with the 55 EMA, then the cloud, I don't think it'll be too hard to break into the cloud. You can see it got through pretty easily, and that's a relatively small spread on the cloud there, so we should be able to get across. The main resistance is going to be right here, where the 99 EMA hits the bottom of the cloud, right where that corner is. That'll be the resistance. So if we can push up there, even though by the time we get there, it's going to be further over, I'm thinking that that would be, that sort of line will follow along and still be a resistance over here. Now, the other thing is if we do manage, if everything goes right, if we can get up here and we can break through the resistance, get into the cloud, now by the time we actually get up this far, like I said, we're going to be further over. If we find resistance right there and the 99 comes down and intersects with that same level right at about 1300, so if it plays out like that, once we hit that resistance, what might actually happen is we can get rejected, come back down and test that support and then push up. And that's usually what you guys will notice with ascending triangles. You'll break out 75% of the time, it's actually 82% of the time, but you'll break out, get rejected from the next resistance, and then retest that support that you broke through, right? So the resistance you break through becomes support, it goes up, gets rejected, comes back, retests that support, and then launches from there. If that happens, we can get all the way to the other side of the cloud, which would be 10% from right here. But it could be even more than that. We'll see what happens if this does turn bullish. This is probably the only alt that I just looked at. I didn't go through my entire list, but I went through the first third of it, 2/3 of it. I went through 20 coins or something of the coins that I commonly trade. And Cody's the only one that even looked like it had a chance. So we'll see. I didn't put a ton of capital into it. Again, this is all still risky trading. So when I'm taking losses, I've been taking a little bit of losses yesterday and today specifically. The losses have been relatively small because not only do I manage my risk well, today I moved my stop loss a couple times and took extra risk. So I lost more today than I normally would have, but it still wasn't that much because I made enough money this morning to cover my loss from yesterday. And my other trade today, I made enough to cover probably a third of the loss I took on my last trade. If either of these trades makes me any money, I'll be in profit for the day. If Bitcoin goes up or if Cody go up, I will make back enough. If it goes up just a couple percent, I'll make back enough to cover my little loss from today if I were to sell. What I'm going to do before I let you guys go is I'm going to set a couple alerts. So I want an alert here if I get close to being stopped out, if the trend line support fails. I want to get alerted on the way up if we break through that top side resistance. And if all that happens, I want to get an alert if we were to come back up this far and test that main resistance. So that's the plan for Cody. For BTC, just so you guys can see how I'm setting my notifications. I already have some on my other BTC chart, but right here I have one from an earlier trade. I'm going to want this to sit right below the top of the cloud. So that's a cloud breach. That's what it's notifying me via email, pop-up, and pop-up on the app and on the desktop version here. So if it comes down and triggers that alert, I'll be able to quickly open my phone and make a move, change my plan, whatever I need to do. So one of the most important tools I use are alerts on TradingView, and we can get into that later in a future Flux University video talking about that. But to be able to manage your trades effectively when you're not there, I have two tools. I use 3Commas, which every one of you guys should actually have an account signed up for because I'm going to be doing a lot of teaching using 3Commas. I'm going to be teaching their platform and how to use it, but I'm also going to be teaching you guys how to use the paper trading features on their website so you can practice these different techniques and strategies without using actual capital. So getting an alert allows me to quickly jump on and make a change. So that's what I'm going to want to do in this case. I'm going to want an alert up here if we get above the 99 EMA. Because what that means, if we get above the 99 EMA, I'm going to want to move my stop loss up to my entry to make it a risk-free trade now that I'm going to have strong support from the 99. I'll probably, if we break the 99, I'm most likely not going to move my stop loss right up to my entry because there's a good chance it can still come back like it did here. And I don't want it to come back to test my entry and then stop me out, right? So I'll play it a little bit more conservatively with the stop loss, but that's my plan. Once I get notified, if I want to, I can move my stop loss. If I was using 3 commas, which I do sometimes, I can set a trailing stop loss of 1.4%, which means once BTC goes up 1.4%, my stop loss follows exactly 1.4% below the current price. So if it keeps going up and it's up 4%, and then it retraces and does a quick little correction of 1.4, it'll stop me out because my stop loss will always be 1.4% below the current price. That's what a trailing stop loss, that's why it's such a great tool, especially with the way that I trade. If I'm getting into a really big trade where I have 100 grand tied up in a trade, if I enter into the trade, I can just walk away and not worry about it because I know that if it does go up and comes back down, I'm going to be stopped out and profit no matter what. I don't have to worry about moving my stop loss or anything. So it's really helpful for scalping, not so much for swing trading, because when you're swing trading, you accept that there are going to be a bunch of fluctuations. You're going to see a move up and a little correction, a move up and a little correction. You don't want to have a trailing stop because you would get stopped out every time it corrects. All right, that's that. Sorry, there aren't other altcoins that I like, but I'm not going to get into anything too risky, and Cody is already risky because this entire market right now is risky. I'm limiting my trades to Cody and BTC. I didn't even get into an Ethereum trade because I'm so uncertain about Ethereum right now compared to BTC. BTC is by far more stable relative to Ethereum. Looking at the chart, the supports and resistances, especially the Ichima dynamics, are holding far better on BTC than with Ethereum. So I'm going to give it a day or two before I start trading more with Ethereum going long. Maybe here and there, but I'm not going to get into any super huge longs in Ethereum unless it gives me a really solid example that it's testing those supports well. If Ethereum, while I'm asleep tonight, has 2 or 3 candles in a row that bounce right off the 55 EMA, maybe tomorrow I would get into some trades on Ethereum because I'll have more confidence that it's able to hold up with those dynamics, but we'll see. Anybody have any questions before I go? I'm like half asleep if you can't tell. I'm losing my voice. I just need to get some sleep. You guys good? Nobody has any questions? All right. Let me just share this. Doesn't look like anybody has any questions. So, I'll let you guys go. Um, Just, I haven't checked the chat, so I don't know if anybody's posted any questions. I'm assuming nobody else had any questions. Discussed in... quick question. Didn't you say WRX? So, you said, I said WRX. What about it? I said it looked good. What did we talk about? Something about it I specifically didn't like? Where did volume go? I was wondering why volume wasn't on. Did I specifically dismiss WRX? I forgot. I don't know. But looking at it now, the EMAs aren't holding particularly well, so I don't see, it's not as tight of a model where it looks like my supports are particularly strong, where I have a lot of confidence that they would hold. Now, there's horizontal supports pretty damn good at 92.53, but to place my SL below that would require well over 3% probably. I'd probably have to risk, definitely over 3% risk to be able to get in. I don't really want to risk 3%. Cody's under 2%. That's a beautiful, beautiful setup. And then the cloud here is right there for additional support, so that's not terrible either. It's just too far. I can't really get in and take advantage of it. The only way I could make WRX work here would probably be if I made it more of like a midterm trade where I was open to taking a little bit more risk, where I could take 4 or 5% risk. Let's see. Hypothetically, if come on, man. That would be a potential 75% run if that was a wave 3. I'm not saying it is. I'm just saying hypothetically if it was. Oh, it was just a 4-hour. That's why I didn't want to get into it. You know what, though? I really do like this. It's a good thing you said that, because looking at it again now, it's not a perfect trend line. It's partially invalidated, but it's really close to fitting, because we got a pretty close retest. It's not terrible. It's a pretty solid channel. It's pretty consistent there. So I must say that actually is a good bull flag. See that? So I'm going to make a trade on this, actually. The only problem is I can't put too much capital into it because I just can't. It's too much risk to justify it. But we're getting a reversal as we speak on the hourly. The 4 hours not. It's halfway up. It's not too bad. It's still at 55, 60. I can make this work. All right, I'm going to make a quick trade, actually. Stand by. Thank you for mentioning it and getting me to look at it again. What happened before was I was looking at the 2, And I looked at WRX for a second, and I said that the RSI and Stoke were a little too high, and then jumped to Cody. I never looked at it any deeper than that. So, man, good call. Thank you very much. This might actually end up being a really good trade. It's 1 o'clock. Holy shit. I gotta get up and go meet with the client in 5 hours. Alright, so I'm not putting that much in. I'm just gonna do like, between this and Cody, I'm putting like $4 grand in each or something like that. I'm not gonna get crazy. I wish I had margin. That would be good. If I had margin on WRX, that would be pretty cool. I could probably take some risky trades, just like dicking around, you know. Those trades where you put in like a tiny amount, like 0.5% of your trading capital or something. Just a tiny amount, but just enough where if it were to break out with leverage, since this coin does 50% runs, if you also had 5x leverage on it, that would be huge. You know, 250% profit. It could be epic. So it's worth it just for putting like a small chunk of capital into it. So I'm not saying, again, I'm not saying that this is a valid count. This is not necessarily going to fit. Hypothetically speaking, if this was a wave 3 that we're in right now, if this was the beginning of a wave 3, completely hypothetical, it would be 75% from the current price would be the target for wave 3, if that was the case. The volume is trending down, which isn't a great look, but we do have decent support there with the cloud in place. I really wish the EMAs were placed better and had better support from the Ichimoku dynamics. It's not great, but it's not terrible either. So I definitely like the trade. I don't at all think that this is a low-risk trade that people in the group should blindly follow me into. I'll make sure to note that when I mention it in my channel. But it's not a terrible trade by any stretch. It's just on the risky side because everything is risky right now, of course. My entry was lower, but I'm going to just mark it to where the current price is here. I can't wait till I can stop warning everybody that everything's high risk. Pretty soon, once we really break out big time, we're going to have low risk opportunities up the ass. It's going to be everywhere. Every single trade I get into, I'm going to have a really low risk configuration I'm going to share with you guys. It's going to be kick fucking ass. It's going to be really exciting. It's going to be like it was realistically before the big dump. Before the big dump, I was on absolute fire. I was getting into low risk trades every day with 5, 10, 15, 20, 25% breakouts. I had coins that were doing 75% over the course of 2 or 3 days. You guys saw this. A lot of you people joined the group after seeing how well my model worked, and you wanted to learn it for yourself. So we're going to have some really exciting trading opportunities coming up. I guess we'll just have to wait and see how it works out. I'm hoping it doesn't take 3 months for things to calm down. I don't think it would. I'm pretty sure the stock market may take a while, but for us, I don't think it's going to be that bad at all. I think we're going to be up and running in no time, to be honest. All right. I didn't share an image of my Cody trade in the group, so let me do that too. I did just post the WRX setup though, the chart I just made. I posted that in the in my short-term trades channel, so you can check that out if you want. Well, I mean, you guys just saw me discuss it live here, but if you want to see me, if you wanted to see my chart again, rather, you can check it out in there. I'm writing this. Unfortunately, the prices are higher now on my alt trades. I wish people didn't ditch my live stream so early, and they could have seen those setups sooner. Smiley face, hashtag Jewish guilt. All right, what else? Was there another question in there before I bounce? So quick question. We already looked at WRX. We're all set on that. The cloud looks different on Binance versus Coinbase. That happens sometimes, but I do trade Matic. I trade Matic all the time. What do you mean? I've done Matic. I've had a bunch of good Matic trades. I've had some that were like really, really big breakout trades on Matic. So I'm going to sleep now, but I'll be very happy to check out Matic later on, look at some of the fundamentals that are coming up. As for the only other question was someone mentioned the cloud looking different on Binance versus Coinbase. I don't care. if you're looking at the same data and it's both the hourly and you have the same settings and the cloud looks different, sometimes that just happens because one particular exchange may have like a really big pump, but it's only on that chain. Like if a pump and dump group says, hey, go to Binance and pump this pairing at this time, that one pairing on that one exchange may have a big spike and then a dump, but the other exchanges don't have that same thing. That can throw off the TA only on one specific chart. I know that's not the case with Ethereum on Coinbase. You're not going to see people pump it. So I'm not sure what it was that actually made the cloud look different, but if it does look different, there's some reason behind it. It's just calculated. They just calculate based on the data on the chart. So I'm sure there's nothing too crazy behind it. But if you think it's like a really big discrepancy and you're curious, take a couple screenshots and post it in the premium chat and I'll take a look. All right, thanks for stopping by, guys. Sorry we couldn't do more actual charting tonight, but there's just not a lot of opportunities. Really, the only two trades that I felt comfortable messing with were these two. I actually kind of like Fetch too, but it's a little overextended now and it's kind of late. Given how high the RSI is on the hourly, I don't think it's ready to touch it. As a matter of fact, it's probably worth shorting if you're on an exchange where you can short Fetch. I would short it right now. It's actually a pretty good opportunity because it's sitting on the 99 EMA, which is holding for support, but we're overextended on all time frames. RSI overextended stochastic, overextended 4-hour stochastic. This is a killer short call, and as far as I'm concerned. A bunch of these are probably pretty good short calls. H-bar may be primed to make a move too. Man, that thing has been stuck sideways forever. Maybe I shit. What do you guys think? Should I make a play on a H-bar? Atom actually looks pretty good too. I didn't notice these two before. Oh, that's why I ignored this one because it was overextended on the 4-hour. But I really, really like this. We're sitting between the EMAs. Some confluence there with the top of the cloud. Atom is a great configuration. I wouldn't mind getting into that, but it's going to require too much work to figure out a way to play it now. So if you guys are looking for other trades, like I said, I'm going to bed. What you'll want to do is see if you can find anything that has a crossover occurring and a reversal on the hourly stochastic. And if you see it start pushing up and the 4 hours not too high, like it looks like it's about to reverse on the way down, it could be a good trade. But the next thing you're going to want to do is look for supports. If it's sitting like H-bar, or better yet, like, what was the other one I just noticed? Which one was it? Atom? Yeah, Atom. If it's sitting right on top of the cloud on the 55 EMA, and you also have a bottomed out hourly stoke and the 4-hour doesn't have, it's not like all the way at the top, and it looks like there might be some more room for it to go up, that would be a really good play, but you want to be right on top of support. I might actually just jump into Atom real quick. This really does look pretty nice. Still got the 99 EMA to get above, though. I don't think it's going to get that big of a bounce. Fuck it, I'll do it. I'm not sharing it yet, because I'm going to get a small bag. I'm ordering it on my phone. So I'm just going to put a small, I'm going to put like $1,000 into it, just see what happens. Let's see. I'm not entering a trade on this. I'm just using it to illustrate so you guys can follow along. All right.